Microphone check and screen share check, please. Hey, thanks. Good evening, guys. Nightly Strategy Podcast for Friday night, July 29th, 2022. I've got some good news. My son's been working on webhooks, which it looks like we're going to be able to run a central TC2000 alert engine and then automatically push alerts with trade framing data to an email list automatically from the computer. Pretty cool. Some like supply side alert generation. All right, so excuse me. Let's start with the market health check today. See what we got. All right, so we had this little Kata 2 action here. And we had our little RL10 wiggle, where that RL10 doesn't even reverse up. It just goes straight up, making this a strong signal. When it takes out that peak right there, that's a very strong signal. And there's a 1, 2, 3. And today was a slight gap up. Strong move to a new 10-day and 30-day high, testing the top of the dragon, which we forecasted yesterday, and had a very strong close at about 412. So that's a pretty good move in 30 days from 362 to 412. Which has featured some periods of nice gain and some grinding and nice gains, and I think like we've been tracking that pretty well. We're now getting to a real critical state up in here where we're testing that 30-day high, but that was everything you could have wanted for today. That's for sure. Now, one of the important elements of an exit strategy is what to do with extraordinary gains when our routine protection stop is still kind of lagging. So we would be looking at things like preserve a 1-day low, the baby dragon, skin of the dragon, spine of the dragon, which is also about a 2-day low, 3-day low, skin of the dragon, RL, PSAR, 5-day low, 10-day low. Those are all good problems to have, depending on where inside here you got your entries. The upside will take care of itself once it gets through this. This is a congestion zone right in here. You notice and this will be noticeable to people that enjoyed this ride down. Like everybody that made money on the short side is licking their chops, looking at this target level and thinking about all the true believers that are going to hold on to this no matter what. And then they start bailing based on their pain threshold. And then if that starts failing, you get a runaway train just like you did here. So this sets up a very interesting compounded critical state, but it must be noted that that's a pretty good 10-day range, and most of that 10-day range is from this 5-day move, which is why I say you got to pay attention to that short-term swing trading. Yeah. Yeah, I thought that notice might get your attention there, William, as a sniper headquarters spot alerts. You know, you're going to get all kinds of red alert messages, with people that aren't interested in becoming TC2000 Meisters, but who know how to respond to short notice calls for immediate action drills on a few select patterns on the time frame of their choice, particularly when we can time that to 3-minute, 5-minute, 10-minute, 60-minute, 30-minute charts, whatever their preferred time frame is. And we can generate basically an infinite number of those alerts triggered by the central server. They can also be posted to a website as well as sent to an email. Yeah, that'll be pretty cool. I'm adding this to the daily reports now. And just because there were enough folks that were interested kind of in the slow day trading, fast swing trading in the 30-minute time frame. And so what I've added here is a new layout called the Market 30, which is going to give you, this is what the 5-day look back looks like. 1, 2, 3, 4, 5 days. And each one of those is 30-minute bars. So it's still giving you the same look as the daily, but now it's doing it on 30-minute bars. So there's your 10-day look back, and then here's your 20-day look back. And I want you to notice how clean and orderly those great big moves are, and why the PSAR is your friend. Like here's the great big moves of the last 10 days that made a difference. You get all of that from 393, and you're still in that trade at 412 with a PSAR flip of about a $2 risk. That's about a 5R semi-swing trade on the 30-minute. So you might be interested in that. Like these little cockatoos. And oh, by the way, this is a nice signal. So if you got the signal on the 30-minute, you might want to execute that intraday on a 10-minute and then take advantage of the intraday pure move as a turbo while keeping a piece on the 30-minute as a swing. And that gives you a nice, now you don't have to be fighting with the, the timing on the 3-minute or 5-minute, and you can actually manage quite a few symbols on that in terms of span of control. Like if you go from a 3-minute to a 30-minute, you increasing your cycle time or by 10 times, so you might be able to expand your span of control in a more manageable fashion. Daily sector report. So we have the S&P at about 1.5. The Qs were the strongest today. Tech led the way. No surprise, 1.8. The Dow lagged a little bit at 1%. The Russell lagged a little bit at 0.7. Treasuries were just underneath the, the go, no-go, the gain-loss cut line at minus 0.27. And emerging markets lagged at minus 0.5. So this was all tech all the time. So let's take a look at the underperformers. But that was also a lot of people buying the S&P, just getting exposed to the mainstream U.S. broad market rather than the techs, or rather than the conservatives or the smalls. This was big money coming in to move the biggest market with the security of the large caps. That's what that is. All right, let's take a look at the underperformers first. So again, the S&P right there. So finance lagged a little bit. Materials and oil, the FANGs and commercial real estate at 1%. Blockchain and lumber about 0.95. Then the big cluster, still in the green, but lagging for sure. Brazil, real estate, the other lumber, VIX, blended commodities, agriculture, which closed above 20 for those of you keeping track of the inflation trade. Bitcoin 0.27 and lithium batteries 0.08. The only troublesome one in there to me is the VIX. That is the beginning of some insurance buying for portfolios because of the very successful move of the last 30 days. That's actually some portfolio insurance starting to sell at a premium. A little frothy at the top. Now, under the zero line here, Aussie dollar in Mexico off a quarter. Global future of finance 0.37. Staples, the defensive play, marijuana getting smashed. Ethereum off 1.5. S&P Biotech, Arc Genomics, and Arc Innovation. Surprisingly, now they've been on the wrong side of some of the big recoveries today. So like they offloaded a ton of Coinbase, which was up again, and they offloaded a bunch of Tesla for balance, and so they got a little air in the gas line, if I can say it that way. Individual targets, Robinhood off 0.66. PayPal underperformed at plus 0.78, so that's not so bad. Coinbase up 1.14, and then Rivian 1.36. So the mostly big disruptors today on the upside. So let's take a look at those. The S&P at 1.5, S&P Tech 1.53, the NASDAQ Tech 1.82. So this is the more speculative tech than the mature tech, if we can say it that way. Then Squarespace, Clean Energy, and Wheat and Precious Metals 2.8 to 1.8. Oil Exploration 3.3. Consumer Discretionary 3.8. That's good because that's broad-based speculative. Energy and large cap blended crypto 4%. So that's actually a pretty narrow set of sectors that did well compared to the S&P. So that's why I say this is characteristic of big money dropping onto S&P futures and tech futures. That's what that is. Now, top performers, U.S. Steel, 9%. No surprise to us who've been tracking. Here's our metals. They continue to outperform. And boy, were those smooth trades today. Good Lord. That's why you trade them. So U.S. Steel, 9%. Cliff, 4.5%. Alcoa, 3.7%. And you have Devon Energy in the energy space, 4.11%. Almost kept up with its sector. And then Apple, the no-brainer in the tech land, up 3.3. So that's one to watch going forward. That and Microsoft both doing pretty well, but Apple got a little bit more. And then the big deal, Tesla up Tesla up 5.8%, closing at 891, testing that 900. So that was quite a move today, which we'll see. Shifting. I'm actually going to do the daily, then the sniper trades of the day before I do the weekend report. I think it's that way we get closure on today's trade. So the sniper trade of the day today was Caterpillar, which had been in a Godzilla mood. It has I'm using $1 as the R10. It's about 0.87, but I just pick $1, round it up. Had a nice big gap up. There's your OR3. And the TC2000 alert and intraday K2 fireworks combined with our little RL10 wiggle made this one a no-brainer with the standard risk box here. Orderly move into the close. So if that's 1 unit of risk, 1, 2, so that's +2. Gave a little kata 2 here. Quick fail, -1. Kata 2. Orderly exit. 1, 2, 3. 2 minus 1 plus 3 is 4. Thank you, TC2000 and the Sniper Trade and the R10 and the PSAR. That's what an orderly intraday trader looks like. That's why I like those big industrial companies. Gotta own them. And those guys that buy them want to just leave them alone and stay in there and can't be shaken out of it on a day like today. So we've seen the simplified sniper with the 30-minute chart. That's the new chart. I'll leave that in there. Dashboard 1, bearish normal, healthy short term, still weak but strengthening on the longer term. And at 50, that thing's ready to go up into to move on to the healthy side of neutral plus shortly. So that is a sign of some recovering health right there. We're within 5% of the 200-day moving average, meaning we're only 3% away from getting back into sideways normal. That's the next logical place to go. If we can get into bullish of any type, it's been a while since we've been able to have this problem. But remember, in our market health check, any bull plus sideways quiet gives you a reason to favor swing trading routinely. So it's not until we get into sideways quiet or any bull that there's a mathematical advantage to holding the swing trades by default. There are some reasons why, when the risk Z healthy that you can do some targeted swing trading. But when you get the market condition overall, in any bull or sideways quiet, that's when it favors routine swing trading. So we need to be ready for that. My experience has been that the hardest thing to do is to get out of markets on dips because you're worried about missing the recovery, except for getting back in after a long-term bear, which is kind of where we've been. So that willingness to start taking on the overnight risk is harder than getting out of positions, to be honest. Because when you've been out, when you've had much reduced exposure to long-term trades, you get conditioned to not suffering while other people are suffering, and then to step back into the water becomes a psychological stressor that should not be overlooked. All right, so we still have warnings about dead cat bounces, and that's what it's supposed to be doing, is reminding us that yes, this still is a bear, and that we're testing a crucial 30-day high price level where we saw a 5-day price smash the last time it was there. So be mindful. The min pains, Diamonds, Coke, Disney, Alcoa, Nike. The max pains, Intel, Verizon, IBM, Procter, and Merck. Little change there. Dow Tactical, lots of dojis, handful of dead cat warnings, still a good number of auto framers. These are typically on the ones that have been lagging and have not participated in the upside. The breakouts are the ones to really pay attention to here, particularly things like Goldman Sachs, which now broke out on the 3-month index, as well as any of them that have broken out on the 1-month index. That's a very good sign. So like Tesla had a big breakout on the 10-day and the 1-month. Good breakouts on Microsoft and Nike. Good breakouts on Chevron, which was huge today. Caterpillar, huge. Apple, huge. Those are the key leaders coming out of the first turn. Those are the ones really to pay strong attention to. Let's say them again. Apple, Caterpillar, Chevron, Microsoft, Tesla. I'll go with Nike. Sure, why not? And Goldman in the finance sector. Those are pretty good numbers in here for Goldman on the 1-day, 10-day, 1-month, and 3-month. That's pretty good performance. But those two numbers right there in Chevron and Caterpillar, wow. Any good? Yeah. ETF tactical summary. That's a pretty clear indication of remember this is a bear, and these could all just as easily crush back to earth. But in the meantime, really good short-term performance on the 1-day and the 10-day. Oil, metals and mining, discretionary on the strength in Tesla, energy, clean energy, and the U.S. leading the way compared to the globals. Auto framer, some goodies in here still. And again, these are the ones that have been weaker. IBM, AT&T, Intel, Procter, Pfizer, and Travelers. Daily squeezes, just a handful on today's larger than average range, but still some good names in there. Oil Exploration and JP Morgan. McDonald's is the key. We've been pounding that thing for what? United Health and Home Depot, like all of those. In healthcare, that's some no-brainers right in there. Looking for the relative strength leaders leading the way. Handful of Godzilla's. Still the was it Cincinnati Finance, Newmont Mining. Still large 5 days, but today's were more consolidation. Not a lot of runaway moves already on those. No Godzillas in the tactical symbol set. And mostly because of the recovery out of the depths of harsh sell-offs. And this is where we're going to start seeing some of these other patterns moving to the front now. Things like the fireworks, volatile, and popcorn ready to pop. So here's one. GWW has got that large 5-day Z-score and 1-day Z-score. That's a thing that is popping. And these little quiet ones right in here, this line up in here, are the ones that are lurking. Pepsi-Cola, Monster, United Health. Boy, United Health has got to be on your radar. It is way at the top of his performance stack and is just quietly enjoying the ride. So when that starts to go, it's going to go. The fence sitters, these are the ones that are in the middle of that tight trading range and are ready from the zero state to break in either direction. And they're all so quiet that they're just waiting for some directionality. That's what that is, ready to pop. Among the most quiets, based on the 5-day Z-score, this one immediately stands out to me. Has already started to make his move. I like Morgan in the very quiet. Most volatiles, the ones that are combining 5-day and 1-day volatility, Walmart must be on your radar. Comcast, Intel, starting to make his catch-up move. So lots of goodies to investigate there. Oops. The auto framer for the sniper for our tactical symbol set. Again, for the intraday traders, that R10 is sort of the minimum manageable risk box. If you want to get fewer trades and slightly wider stops, you can actually use the R5 or twice that and still have a 5-to-1, or a 4-to-1 baked into the cake. Because remember, if we have the range stat is broken into 10 pieces, the R10 is 1/10 of that. So if you had some kind of sell-off and a move off the bottom and you were framing that with an SSC, you have like a 9-to-1 reward to risk. But if you're giving it 2 of those R10s, then you still have 8 left, and then that gives you a potential of 1, 2, 3, 4-to-1. So even if you could double this and still have plenty of justification for the intraday move, which should be on your mind when you're thinking about, if you're thinking about that 30-minute chart that I showed. There's the twice the R10 is now pretty sensible. In the tactical symbol set, the sniper stats, Microsoft and Amazon should be really getting your attention here with the really strong moves and that breakout. And then this just demands your attention U.S. Steel, man, look at that. It's at 100% fill on his 30-day and 10-day. Has had just a normal 5-day range, but today was a huge move. That means there's a lot more ready to go. Same thing with oil exploration. He's been pretty healthy on his longer term, exceptional on his 10-day, quiet on the 5-day, and an explosion today of 4 sigma. That's one of the ones you want the TC2000 alert on intraday, by the way. Wheaton Precious Metals, not bad on his intraday move, was almost large enough to get him into the green. ExxonMobil, and look at McDonald's. Quietly getting it done. That's your strength leader right there. ExxonMobil not far behind. And Chevron in pretty good shape too, I would say, with those numbers. Coca-Cola, a nice little stealthy play in here too. Those numbers are pretty good. Apple's very good too. So 1, 2, 3, 4, 5. Those top 5 right there: McDonald's, Coke, ExxonMobil, Apple, and Chevron. If you're a fund manager and you got to start feeding money into this thing, you could do a lot worse than just automatically picking those 5. So there's a self-fulfilling prophecy in there that's going to look really good on those. I'm not as persuaded on XLU there, brother of mine, because that run, I think, is done. And that is not going to be the growth that pulls us back into the bull. That was a reflection of successful defensive plays, but I would be least surprised to see that starting to suffer as that money rotates out of that good performance into things more like energy and just tech. This is where tech has room to catch up yet. And real estate is still pretty healthy too. But it has room to grow. That's what we're kind of looking for. This is already fully valued, and there's not much more for it to go. I mean, utilities are not going to lead you into the growth world. It just doesn't move enough, right? So utilities are not so speculative that you get a ton of money into them. There's going to be people that own them just because they always got to own them because they're collecting dividends. So you don't have that same kind of downside fear. Like, you can't fear a guy out of utilities. If he's owning utilities, he's just going to own them and give them to his grandchildren. Ed asked me there, is there a TC2000 course in the archives? Well, the Foundations course has an overview of the 25 standard frames that are in the TC2000 bundle, which does a nice job of laying out the whole architecture on that. Plus, really, if you watch how I've been using the the radar screen and the different formulas and all that, you get most of it. We could probably do some quick tutorials on the alerts as a service to those of you in the creativity course. I think we'll just do that and make that available to you. I have to do a little mini master class on that. But if you look in the foundations course, there's about an hour of instruction or so on the bundle. What we might be persuaded to do is to get a list of the top 10 tasks to perform in TC2000, that we kind of just build that out and start building mini master classes. I'll see if I can't persuade my son to do that, or me. All right, moving on. This is, you've seen us kind of tracking these support levels. This is really healthy now that we have cleared that key 400 level, and there's nothing back here to slow it down, so you get up around 420 off the chart. The only issue that we have is this 30-day run has been pretty good from minus 1Z up to 1.5. So that's a pretty good pop, and so we're at the sort of a natural limit of reasonable expectations. So this is where the last time that thing was up around 415, that's where it fell off so harshly. That was the one that just murdered people. And you can see that when it collapses, you get massive pain and suffering. Then the corresponding move up is faltering and hesitant because of the memories of the pain that was induced by here. And much more the earlier traders are much more prone to be on shorter time frames and getting their pay in these little chunks. So you get fits and starts and sputtering. And so you can see that in the price relative to 200, how that choppy nature. I mean, you can see that in here, these little choppy moves. Whereas the pain and suffering of the sell-off was just dropping like a rock. So these are not symmetrical moves. March up the steps, jump out the window is the term of art on that thing. Right. Now, this is what's interesting. When you take a look at the RL30 slope over the last 10 years, and you realize here we are up around +1, this is all the last 30 days is among the best 1, 2, 3, 4, 5, 6, 7 30-day performances of the last 10 years. That's how good that's been. It may not have felt like it in the middle of it, but that's just a fact. So there's people holding on to abnormal gains from the short-term trading that's going to be on their mind. Now, as we said yesterday, even though the RL10 slope and the RL30 slope are both up here in the nosebleed section where they have typically rolled over and had some short-term pullbacks, the longer-term trend, the RL90, has just started to make that turn, right? This is what I mean by that pain and suffering and how harsh that sells off. It takes a long time to recover from those sharp spikes to the brain. And that's why shorter-term trading and bird in the hand is worth two in the bush is characteristic of the upside trading in there, whereas the downside trading is more of runaway momentum and continuous collapsing dragons. Like here's another example of that harsh sell-off and a harsh sell-off, whereas the upside is really grinding. All right, so just realize that where we are is coming into the station here to test this around 415, and the last time it was here, it was brutal. But if it gets through there, then you realize it could get to here and here and here, which gets you back to 470. I mean, that's a long move. That's a 10% move, 15% move. So that's, we recovered from the abyss leg, and now do we get this? And I don't know, but this is a test. This will be tested. And the reason I say it's a test is because this price level here is going to activate all the people who'd made money on this one. So there will be more downward pressure simply because you're bringing in those tactical shorters. Because now they have room to really move it to make a big play. So the very success of that is what encourages the downside move. At the same time, you have a lot of folks that are kind of content to have made money coming in here and are maybe more concerned about preserving those gains than holding on for a second leg. The only new buying pressure are going to be people who want to participate in what they think is the second leg up, who maybe didn't participate in this. So you have to balance their energy coming in. They're already tentative because otherwise they would have been in here. So tentative buyers with raging shorters, and that's why it's very hard to, you'll never really see V bottoms. You get that bottoming process looks a lot like this, and before it finally oozes its way back up. So as long as we're in bear and sideways, I'm just a short-term trader with a very occasional swing paid for by the market's money. All right, so that's that. Let's look at some sniper trading. All right, here's U.S. Steel, 3 minute. So nice gap up. It establishes the OR3. This one breaks to the upside, so I go long. It immediately fails down here, so -1. It then reverses 1, 2, 3, takes out that one again, so I just buy it again. Same standard risk. So we're -1 into this thing so far. Okay, so that's going to be good. Oh, you thought it was going to fail right there, but it did not. Where was I? So this would be a second position fully justified by about almost 2R in hand and a COTA 2. And then I could also draw this across from here and say I could take this one as an emerging dragon, or this one as a COTA 2, this one as an emerging dragon. Either one of those is legit. Standard exit. One, two, maybe 2.5. So -1 and 2.5. We're at about 1.5 coming out of that box. COTA 2. Scratch. COTA 2. 1 unit of risk, maybe 1.5. So 1.5. So we're about +3 on U.S. Steel. I think that was it. That may have been it for the day. Yep. And this is a case where I just want you to notice that I am using 25 cents on this one, which is 2 times the R10, which is about 12 cents. And with a nice gap, I wanted to be in longer, but I still ended up taking the one on a lot. And I might have gotten chopped out too much in here. So on this one, I just decided today to use 2 times the R10 or maybe the R5. So 25 cents, which is about a 1% of the price. I mean, we're talking about a $25 stock, and I'm using 25 cents. That's 1%. That's not crazy tight, but still gives you room for some nice moves. This was that Caterpillar trade again. +4, I think we said. I'm not going to repeat that one. Oops. Sorry. This was Devon Energy. Sorry. So this one also chopped around somewhat on the OR3. And by this far in, the market was so strong and energy was very strong that I was only going to play the long side, so I did not take that short. But I did take the COTA 2 right here in this little elbow with a standard risk. So 1 reward, 1 risk, 1 maybe +2. COTA 2. So minus 0.5. So now we're at about 1.5 net. COTA 2. +1, so we're at about 2.5 coming into 3 p.m. And I think that's all we did on that one. Yep. And again, I was using the 2 times R10 on this one because I wanted to stay in positions longer. But you know, I missed a second entry there and here. There's a reason for that. Span of control. And this is why. Mr. Tesla today. PSAR reversal. Risk box off the bottom. Entered. Working. Second position, this was on the basis of consolidated. This was that little R10 wiggle that never even wiggled, but it got done with this little choppy and then started working, and then I took a 1, 2, 3 exit. So that's how quickly I changed my mind. So that one is about 1, so that's 1, 2. So that's about +2. This is about a scratch. Caught a 2, scratch. Caught a 2. Starts working. I said, well, you know what? Had 2 chances to fail. Did not. Let's go. The whole market was starting to catch fire here. There's your R10 wiggle. Let's go. R10 wiggle. Let's go. Let's go. Let's get out. It's time of day now. We're getting, yeah. Let's not get crazy. All right, so this is a $5 risk. The other ones I was using the double. This one, Tesla, was my focus today. So $5 risk. So let's just look at this. This is 864 out at 891. This is 866. 870. 879. 888. So this one is, let's see, 17. That's plus 27. 25. 21. 12. And 3. So that's 52. 73, 85, $88 captured. Span of control on those other ones. Find the mover. Crush the whale. Bring it home to the tribe. And plus 1, 2, 3, 20. No overnight risk. Bear market. What do you want? Tesla's the most important stock in the world. It's the health of the U.S. market. All right, let's look at the weekend report now. Bear normal, healthy short, improving long, getting close to sideways, still favorable volatility. New set of leaders for August, all U.S. all the time. Mid caps, Russell and the Dow. Energy, utilities, healthcare, oil exploration, energy, and clean energy. That should tell you something. Chevron, United Health, McDonald's. ETF2 went from 0% to 40% as all four of the U.S. indexes got above their 4-month their 4-month moving average. So for the first time in a long time, ETF2 is recommending taking some exposure, not to be ignored. The monthly 1, 2, so that would be if it gets above 415, that's a 1, 2, 3. Has to get through the dragon, and then it's free and clear above 450. So that's your tactical play in here. Stop to me is the belly of the RL10, about 395. Nine days telling the same story. This is like a 2-week, and it's already rolled nicely. And here's your marker. There's a 1, 2, 3 right there. It's through the dragon. There's the PSAR flip. Then your next target is here because of that resistance. Then it is this. Then it is this. And then this is the land of milk and honey up in there. You know, the last time it looked like that was here. It gave you a 1, 2, 3, just peaked above the dragon, and then smash from 460 to 360. You want to go to sleep on this market? Be my guest. Don't be my guest. Weekly key resistance, we're just peeking into that. When it failed here, it could not go higher. It did that down to 360 from 415. That was minus $50. That was a minus 12% move in a week and a half. Word to the wise. The 3-day starting to give us some of that, well cleared. That's the test right there. We're going to find out. There's going to be a lot of happy talk this weekend. So I would not be surprised to see a scenario, nice gap up and then harsh sell. Or nice gap up and go. Who knows? Don't know. That's all momentum. So there's our daily, and then there's our 30-minute. I've added that to the weekend report too. All right, quickly. All U.S. Still long-term suffering, but that's where your strength is. Short-term goodies, that's all that is. The real estate is showing some resilience. I like that as the stealth play. Energy is so far advanced, you got to wonder how much more is there. So healthcare and tech. Then the speculative U.S. is next. And all of them are better than the techs, which fell further, even though they're actually leading the way up. regional report. U.S. is now back above, and you compare that to Asia and Europe, you can see this is where the strength is. Oil and commodities, for sure. All energy. A little bit of strength in biotech. Now this white and green, notice these are starting to decay. The bonds, treasuries. This is a rotation into growth and equities. Volatility and liquidity, energy, exploration, biotech, semiconductors, gold miners. Brazil's not far off. Look how nice and orderly the real estate is, though. It's a below average volatility, but still very, very liquid, and it's been holding up pretty well. So what volatility it has is in our favor. So that takes us through the weekend report. We'll finish up with the traders. Here's my brother. He only had 30 minutes this morning. He got caught in that same little Tesla trap, only he got out of it better than I did. Only, minus 0.1. Twitter, he gave a shot to. He got won the hard way. This one, I just think, your normal rule would be here and probably here. I'd rather see you there out here than holding on, holding on, holding on. This was probably a trailing stop, but it looks like to me you stayed a little long. I'd rather see you like here instead of there. Walmart. Possible second. Then a nice 1, 2, 3 for 2.85. 3.75R in 30 minutes. And then out to the salt mines to work. Nice work, brother. Woj. I like the short. This is where the stop and reverse should be. After that nice gap up, you can be long here instead of waiting for that. I realize you're waiting for the emerging dragon, but why not? I like this, and then we should be here and not there. And then that pays off instead of scratching. This is just as nice as can be. I'm not surprised, but then that nice reversal. I might have somewhere like in here or here looked at that second position, but still got paid. For the day and for the week, in spite of me just beating you up all the time, you're still getting it done. Getting paid. Stop being out of the market. God dang you and your meetings. Yeah, he had just framed it and it collapsed, so he didn't get that, but he did get the resumption, and that's good. Lee, or less in the euro. Um, that's almost in the middle of the river. I could probably see that, I guess, but that looks to me, that's questionable. I'd like to see it get through the VWAP, to be honest. I feel like that's river trading. You get it back a little bit here, but so there's just not much until you get the pinch. And now the breakdown, we might have tried that. There just wasn't much in there. And then when you just decide to be done, they said, oh, okay, now we can go. So that'll happen. Back to Woj again. Or did we already get this? Oh, I'm sorry, we already had that one. Devon and Tesla. I double counted you. Paul, on Devon. This was very good patience. I was tempted here, but because of the size of the gap and plus energy all day was up so strong, I did the same thing and waited for this to get through the. Now you get a little pocket entry. I like the second effort. I might have maybe tried here. Maybe we could get somewhere in here because you have the little flag and then it breaks out. But still, that's pretty good. And then I love the re-entry even more. 1.6. Cliff. Boy, that's just as nice as can be. I had U.S. Steel, but this one, the quick reversal and then held support at the all-important PSAR. The PSAR is your friend. That's so good. I might have tried another one somewhere in here or in here, but still perfect, orderly, get paid. I likes it. Tesla for 1.2. PSAR flip, clears the noise. He's in. Good. Resumption high of the day. Good. Resumption. Good exit. I like the re-entry and a quick exit. 1.2. Nice. And then finally Devon. Yeah, this is almost right out of Jack Kingston's playbook too. You know, he's tracking those three symbols like you did. You know, he also does Devon for the energy. He does Alcoa rather than Cliff for the metals. You might also, you know, it could be any one of those three to represent, you know, that trading trio and then Tesla. So you get a tech large cap and sexy momentum stock, you know, a basic material industrial, and then a small energy company. Well, it's a mid cap. Actually, lower end of the S&P 500 now. So you get energy, metals, and tech momentum. That's pretty good. So this is really nice, and that's a great re-entry for 1.6. Just right by the numbers. Really good work today, Paul. All right, I think that's everything we got for today. And we'll get this thing going. I got some work to do with my son on that, figuring out how to operationalize the, you know, the web hooks and signal generator. Because my spider senses it'll look something like this, that we'll have that TC2000 engine plus his Python code that we use for the sniper. They're using the same data source. And then that can generate a signal, you know, on 1 minute, 3 minute, 5 minute, 10 minute, 30, and maybe 2 hour or something like that. So we'll probably look at some package of alerts. And then you might be a day trader and interested in those. You might be a swing trader interested in those. You might be a hybrid trader interested in those. And even if the daily signal, you know, like on a daily chart, a signal was hit for that more traditional swing trading. We might do that. So when the engine generates the signal, that can go to either an email list for subscription. It can also, get recorded on a website. We'll probably just have a subscription model on that for some reasonable, monthly fee or something. That way, you just get the signal, and you call up your trading window and then quick frame and fire away, so you don't have to master maybe all the 25 different windows that we have in the TC2000 bundle. If you want to just simplify your life that way, that's certainly a way it can be done. All right, so I'm going to think my way through that. All right, take good care. I should also say that Dr. Morrison and the Forex group have been working on their robo trading with scripts on Oanda for Forex, and they're basically using hourly charts, and they're trading 24/6 with these robotic scripts. And my son has helped them automate their process, so what was taking them 3 and 4 hours to get data and then crunch it and then put it into their framing, they're now doing in minutes. So the power of Python. And I told him I asked him, well, how are things going? He said, well, we're actually doing really well. And so I said, well, give me the good news story so that we can help people that are kind of interested in that intermediate term and with the mechanical effect of standard production with automatic trailing stops and harvesting positions and doing that. He made 14 grand last week on a $100,000 account. And I said, you got to take the lid off of the good news so that we can publish that. Yeah. So we'll get that done. That's that's Dr. Eric Morrison. He just put he's doing so good. He just put his retirement papers in, and he's not going to teach at our college anymore, so that he can just do this full time and take care of family. And he's got a little circle of guys. So for about 3 years, they've been doing the Forex together, and so they have a nice tight working group, and have added programming plus my son's programming in there, and they got a nice little community of practice, and they have a weekly operations call where they're doing Zoom meetings inside their little membership circle inside there. So I can recommend his work. I've taught with him for 10 years. Former rocket scientist at NASA, and just a genuinely good-hearted person. Highest recommendation for him. So really proud of the work those guys are doing. So that's all the news today. Tomorrow morning, 8:30 for the True Storytellers. You know who you are. Sunday morning for the Euros in the Creativity 202 course. And Monday night for the U.S. Creativity 202 guys. And that's everything. Tomorrow night, the swing trading frames from Ken H. You ought to see his charts. Oh my God, his trades from this week, astronomical. If you're interested in those shorter term swing trading, but you don't want to be a day trader, I'm telling you, if you're not paying attention to the Saturday night sessions, I can't explain why you wouldn't pay attention to that. His weekly, daily, hourly frames, that is money. I'm going to have some of the Creativity 202 guys in that systems development pilot course we're running. We're going to build that system out with the specifications. So more to follow on that too. All right. Take good care, guys.